Oh yeah, Bitcoin at 2 trillion market cap is completely irrelevant for nation states being able to engage in war. We live in a world where there's about 1 quadrillion in total assets. So it's like 1,000 trillions. The US bond market is 36 trillion right now, 37 trillion. Global sovereign bond markets are, tens and tens of trillions, maybe 100 trillion. Global money supply is over 100 trillion. Bitcoin's a drop in the bucket. So right now, doesn't mean it's not solving a problem. I mean, if someone gets locked out of payment rails or they want to hold money that's not being debased, it's serving millions of people. But it's at its current scale, it has very little impact on nation states. Nothing short of being like 10 times or more bigger would start to affect that. Basically, when a meaningful percentage of the population would rather hold Bitcoin than hold a fiat currency.
With a sobering macro perspective, Lynn Alden begins her analysis. With a current market valuation of about $2 trillion, Bitcoin is but a small dot in the enormous ocean of global assets. To put that in perspective, it is estimated that the entire value of all assets worldwide is approximately $1 trillion. Global sovereign bonds are valued at more than $100 trillion, while the US bond market alone is worth between $36 and $37 trillion. And that figure rises even further, well beyond $100 trillion, when you include the entire amount of money in circulation worldwide. Remember to click the subscribe button and enable notifications to ensure that you never miss our most recent analysis. Thank you and enjoy the video.
One is I wouldn't take it as a given. It's hard to predict exactly how large it's going to get. One thing I like to reference is Jeff Booth. He often phrases things as if Bitcoin stays decentralized and secure, which is basically, so we're 16 years in this technology. It's been tested in multiple ways. It's very anti-fragile, but it's not necessarily invincible. So to the extent that Bitcoin as a network is not kind of corrupted, captured, neutered in some way, as long as it just kind of keeps functioning the way it has been, I expect it to keep taking market share up to a very high level, because it's as fast as fiat currency, but harder than gold, as long as, again, it continues to operate the way we expect it to. And so I do think that eventually it does eat into major nation state seigniorage. Whether it's 100%, like it just completely invalidates the existence of fiat currency, or if it takes like half of it away by basically constraining them more, by giving them a much faster alternative that people can go to. That remains to be seen. We already, the closest thing we have today is like dollarization. So if a country just manages its currency terribly, people dollarize from the bottom up. They find ways to get dollars and other assets, and everyone learns you just can't hold currency and bonds in this country. And so that country massively loses a lot of its seigniorage. And then extreme examples, the nation state itself will give up and just say, okay, we're gonna use the dollar as our currency. That's happened to a handful. And Bitcoin can do that to stronger currencies over time when it's bigger and more liquid. So we have a model in place, and we have this kind of long-term incentive to. There's really no reason to hold currency or bonds other than either one as the near-term working capital, like your checking account, basically to kind of pay bills in the current fiat era. It's like a hot potato. You use fiat currency but don't really hold fiat currency. Or if you're a trader, sometimes it's a volatility reduction. That's why it's still useful, because it's stable, at least developed market currencies. So if you want to reduce volatility, it can be useful. But for the most part, it's not that useful. And as Bitcoin gets bigger and less volatile, it keeps eating into the reasons why you'd ever want to hold fiat currency for more than just a couple months worth of capital.
Are we still too early in this journey, or what is your sort of belief there?
Oh yeah, Bitcoin at 2 trillion market cap is completely irrelevant for nation states being able to engage in war. We live in a world where there's about 1 quadrillion in total assets. So it's like 1,000 trillions. The US bond market is 36 trillion right now, 37 trillion. Global sovereign bond markets are, tens and tens of trillions, maybe 100 trillion. Global money supply is over 100 trillion. Bitcoin's a drop in the bucket. So right now, doesn't mean it's not solving a problem. I mean, if someone gets locked out of payment rails or they want to hold money that's not being debased, it's serving millions of people. But it's at its current scale, it has very little impact on nation states. Nothing short of being like 10 times or more bigger would start to affect that. Basically, when a meaningful percentage of the population would rather hold Bitcoin than hold a fiat currency. That's when it starts to matter. When it starts actually taking away seniorage from the nation state, which doesn't happen at a $2 trillion market cap today. That's 0.2% of global assets. You need to start getting into the whole integers, at least. I mean, ideally double-digit integers. So basically, until it's kind of like a new foundational type of money at scale, then yeah, it's a different discussion. And these things inherently take time. But you're going against an absolutely massive network effect. This is both a self-sustaining network effect, and then it's also a nation-state endorsed network effect. So it's absolutely massive. And this like open source network has to bootstrap from zero, and to the extent it's successful, it's going to take a very long time. And it can even take so long that people have to just kind of grow up with it, and it's around, rather than making the active decision to transfer to it. Entities like the US and China have more runway than, country XYZ that's a tenth of the size and more externally vulnerable. But the longer this goes on, the more indebted these sovereigns get, and the less kind of reliable the currency is. And then the longer Bitcoin's around and trusted and understood, then the memes start writing themselves. Like, it just becomes understood that holding bonds and currency for the long run is stupid. And you have to hold scarcer things. And then it becomes, okay, what is the best scarce thing to hold? Gold's an option. It's a good option. Equities are an option, depending on what country you're in, what access you have, and what their current valuations are. And Bitcoin is so far an amazing option. And so I think those things will eat into currency and bonds. And Bitcoin has the additional advantage, unlike equities and gold, that it can be used for money in the digital age.
Lynn Alden explains that until Bitcoin grows large enough to directly challenge central banks, we're stuck in a difficult transitional period. Fiat currencies keep losing value, government debt keeps rising, and deficits are quietly covered by printing more money, which erodes the currency's worth over time. There's no real political will to fix this. Voters want benefits without making sacrifices, and politicians avoid making hard decisions. In the end, fiat money becomes the system's safety valve, absorbing all these problems through gradual devaluation. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
Do any of the people that run the system want to do it? And then even the voters, if they say they want to do it, but then it's like, well, okay, so we're going to do austerity now, and your social security checks are going to get clipped. And they're like, well, no, I don't want that. I just want the good side, not the downside. I don't want anything to happen to me. And so between the voters and the politicians, the fiat currency debasement is kind of the release valve. So as they fail to agree with each other on how much to tax, how much to spend, the error just gets kind of invisibly debased and argued over, and kind of the impacts happen with a delay. So I think nothing short of a forcing function is needed, which is basically, it's going to keep happening until something forces them otherwise. Which is to say, until there's something really powerful in their face, like Bitcoin is 10 times bigger than it is now or something, they're going to keep doing it. Yeah, and I think, again, a big chunk of why I think it happened is because of the speed mismatch. So basically, the world became able to send IOUs around the world instantly. Gold was still very slow, so they levered it 20 to 1, basically. And then they just kind of dropped it entirely. And people went along with it. And even today, when currencies fail, people generally dollarize. They don't start trading around gold and silver as frequently. In extreme examples, they do, like Venezuela, they'll use a combination of dollars, local currency from neighboring countries, flick little pieces of gold and silver. They'll use kind of whatever they can in extreme environments. But basically, it's just not solving a fundamental problem for them. Gold and silver, and so people want the speed of other things, so I think that's kind of the technological era that we're in, as weird as it is. The example I like to use sometimes is when people invented farming, and we transitioned from hunter-gatherers to farming and cities. Most evidence indicates that the average life expectancy went down, so there's a trade-off that the ones that were farming, they had more overall power because their numbers were incredible, and they could just displace the hunter-gatherers, and they were able to, some of the people were able to start working on tools full time, and then technology kind of started building very quickly. So the civilization got a lot of power, but for the average individual, like their teeth were rotting. They were just not as healthy. They were now crammed together and getting disease in a way they didn't before as frequently. And so it actually was like a lower quality of life. And this lasted for like thousands of years until they discovered hydrocarbons and use it to make like running water and and electricity, and then basic medicines and germ theory. And then they kind of got out of that slump, that multi-thousand-year slump, and they actually got life expectancies kind of really, really higher than they were in the hunter-gatherer era. And I think we're in that kind of valley now, where when you get something that comes before something else, if you invent farming before you invent running water, you're going to have a rough time for a while, even though it's like a thing you have to kind of go through. And when you invent fast transactions with the telegraph, but you don't have fast settlement until Bitcoin a century and a half later, you're going to have a problem. You solved one problem, but you invented another for yourself. That's the world we live in. And even though Bitcoin exists now, like I said, when it's under a $2 trillion, market cap or so, it's still in the nation state's court. It's still the central bank's court right now. So it's still, until it becomes so big that it actually rivals the size of that existing system, we're still in that era where most people are on a fiat standard. And so we're in that kind of valley. And so in that valley, things can seem unintuitive, like people living shorter lives than their hunter-gatherer counterparts, despite having ostensibly better technology. And today, it's like, why are we using government debt as assets? Well, because we're in this weird valley of time where they can justify it.
According to Lynn Alden, people frequently develop new technologies that address one issue while causing another. Our current monetary system permits quick international transactions, but has unintended consequences like inflation and growing debt. Much like farming increased the power of societies, but negatively impacted people's lives for thousands of years. She clarifies that even though money depreciates over time, people still want quick and easy access to it. For this reason, instead of switching back to slow, hard currency like gold or silver, we are currently in a valley of transition. Although Bitcoin is a breakthrough that at last enables secure settlement and instant transactions, it is still too small to pose a direct threat to the global financial system. We will continue to live in a world where fiat money is the norm until Bitcoin becomes large enough to compete with central banks. She also points out that the idea that government bonds are safe is a contemporary one. Bonds were bad investments for decades in the middle of the 20th century. Only in the past 4 decades have they gained recognition as trustworthy safe havens. This demonstrates how people's perceptions of what is safe evolve over time. She believes nothing will stop this cycle except a major forcing function, something powerful enough to force change, like Bitcoin becoming so large that governments can no longer ignore it. Until then, fiat money will continue to be debased as the hidden release valve, keeping the entire system alive. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.